Now, let's talk about market performance. The one thing we're talking about earlier is the fact that people have been saying we're seeing recovery levels right now. Thursday, I was a bit skeptical. In fact, I thought we were jumping the gun. What's your take?
I fundamentally still think we're somewhat jumping the gun. One of the themes that we've sang over the last year or 2 years is that the market sentiments have changed, and increasingly, also because of the way the index is skewed today, we've got to be able to separate underlying market performance from the leading players in the market. Dangote cement is 20% of the index. So every time Dangote cement moves, the index moves. And so for me, is the NSE All Share Index today, for example, even the right gauge for market performance, given the fact that one stock is 20% of the index. But I think the fundamental issue is how are investors reacting to information or to new information that's coming to the market. And I think investors are still very muted in their responses. We've seen banks, deliver sometimes even stellar numbers, but the market has barely reacted to that. And that's simply because there's still that overhang of the last 3-4 years on the market. Investors are still basically very cautious. So each time there's a rally, people just generally sell into those rallies to book some gains or to be able to lock it. And I think that's going to continue to drive the market going forward until we see a lot of new money coming into the market. Probably first-time investors who've started to take a long-term view of the market, and then who wouldn't sell at every 5% move in the market.
What's your thought on the new listings that we've seen coming on the market? I mean, we're hearing about a new one coming in, Geofluid, possibly this week. What is your take on how the new listings have performed, including the new ETF? Investors just don't seem, to be warming up to that.
Uche, it's the same problem that we're having. Look, if you're listing a company that's $1 billion, $2 billion market cap, from an index point of view, every portfolio manager who's building a portfolio that's representative of the Nigerian market would ordinarily be compelled to put that stock. You could underweight it, you could overweight it, you could be neutral it, but you would have to put it in your stock. Simply because from an index point of view, if you're benchmarked against the index, then you want to be exposed to as much of the index as possible. The challenge is a lot of the companies, well, the few companies that have listed recently, they're pretty small. So you're not going to attract your institutional investors into those stocks. You're not likely to attract your long-term players into the stocks. It's going to be more speculative buying. And I think that's the bigger issue, to say that, look, if we're going to see new listings actually drive the market, then that's got to be big listings. You've got to have the telcos list. You've got to have the oil and gas majors list. And then people start to see that, okay, look, fundamentally, you've got to include those guys in your index. And then you see a lot more liquidity in the market as a result of that.
I mean, what's your take about how the regulators, have been handling what's the sort of the functions on the NSE day to day? We're hearing today or yesterday that the NSE said they're delisting a couple of firms, they say, because they were found liable of not meeting post-listing requirements. Certainly such strong regulatory moves should boost confidence on the market.
I think, yes, in the long term, it will definitely boost confidence. I think one of the biggest problems we had in the last, from 2006, 2008, where companies that hadn't released results in 10 years were being traded on the floor, and people basically mismanaged the market. But I think that if we see a lot more discipline from the NSC and from the Securities and Exchange Commission, you are going to see corporate action, or you're going to see a lot more focus by shareholders on corporate governance. Because the biggest challenge for shareholders today is, a company hasn't released results in 2 years, and there's absolutely nothing I can do about it as a shareholder. But if you keep seeing people being delisted, then shareholders are going to be forced to basically take the action that is required to either fire management if management isn't performing, or do whatever it is that is necessary to ensure that they don't fail those listing requirements, and then suddenly you have no avenue to trade your shares. But I think that that's something that's going to go on in the long term, and we're going to see a lot of positives from that.
Well, sort of off topic, what's your thoughts on the fact that we haven't seen GT Bank or Access Bank come out with their results just yet? Surely this is another indication. Isn't there some sort of time limit? Because a lot of investors are playing the market. market-based and what's happening in the banking sector?
In fairness to the banks, banks can't release the results unilateral of the central bank. If the central bank hasn't approved the results, you just simply can't release it. I would try and find out what the issues are for some of those banks, but the reality is that GT Bank is listed in London as a GDR. Axis Bank have just listed, have just raised $350 million in Eurobonds. So I think that those guys understand that from a corporate governance point of view, they will have to release their numbers and release it within the window that is approved by the CBN and the NSC. But I suspect that what you're seeing is a bit more scrutiny from the central bank. And we've seen that. The central bank wants to be sure that numbers that are put out there in the public domain are real numbers. And there's a lot more scrutiny. I suspect that's really what the issues are with these guys. But I think we're going to continue to see increased and improved corporate governance from the corporate sector in Nigeria, and that's only going to be good for the market.
Well, very quickly, since we're running out of time, give me your outlook then for the market, and certainly what are some of your stock picks as we go forward? Everybody's saying banking sector, others say FMCG.
I think it's the usuals. I've always liked the breweries. I think that they've been able to get a lot more efficiencies into the operations. You know, from a cost point of view, they've been able to manage their costs. So I like the breweries. I think the building materials sector is going to do very well. I think there's need for infrastructure development in Nigeria, so that's going to continue to drive the banks. Some of the leading banks would continue to post stellar numbers. The challenge I have with the banks is they just have this huge number of shares that it's not exactly very easy. And once you have that much liquidity, price movements can be curtailed. But overall, where do I think the market is going to end the year? I don't think we're going to do another 5–10% from where we are today. I think that what the market will be looking for is some sustained performance from the leading players in the market. Right. We see another year or two, we see a couple of very big new listings, and then you can start to see some gas behind the numbers.